Hello guys and welcome back to the channel. So I was done for the day. I wasn't really going to execute any trade again, but I do remember that someone actually commented that I should make a video on the 714 method, and I realized that yes, it has been a while that I've actually talked about the 714 method. I mean, I've been using it, but I've not really made any videos on that again. Today I promised myself I'm not going to come back to gold again. I made a lot of profits on gold today. Three trades, everything went straight to profit. This one I had to get out early, but it was also a very good trade. Now, because I'm not going to trade on gold right now, I have to find a potential pair to actually use the 714 method on. So GBPUSD is actually a very good pair, and I say that I can actually use the 714 method on this because it's a solid pair. It doesn't really stress that much, and it moves according to the trend. So currently the trend is still in a downtrend, right? We're in a downtrend, we are not in an uptrend. But first things first, the most important thing is let's bring out the 714 method. Now I think this indicator is no longer on the indicators tab. I don't know, I somehow found a message in my emails about the indicator or something like that. I not really get time to check it out, but if you need it, you can always text and I'll try my best and create a group for it, so that Telegram group, so that I'll just drop the code inside that Telegram group. You can just go ahead and pick it and start using it, right? So it's that simple. So obviously this is what we are having on GU today. Now you realize I just rushed in. Most of my charts are still actually loading up. I just came in because I set alarm about 12:05. It should alert me to come and trade it and show you guys. So first things first, this is actually going to help a lot because we already have a market structure shift right here, and price dropped back down just to pull liquidity from the last low right here. Now this level is a very serious zone that price might not want to push through if it in actual sense wants to continue shooting all the way up. So let's talk about the 714 method for a moment. So I can't start trading without actually talking about the 714 method again, right? So this right here is this same lines right here. I just want to make some drawings right there, right? So if we are in a downtrend within this zone, our expectations is price should hit a fair value gap, support and resistance, or an order block, and it should shoot all the way up. So we are trying to catch a buy in the sell market, right? So within this zone, if we are selling, we are looking forward for a buy. If we are buying, we are looking forward for a sell. Now, under normal circumstances, what do we have within this range? So we realize that we are in a downtrend, right? And when you look closely, you realize that price has already pulled liquidity from the last order block, which is this zone right here. Even though price did not take out this high, but it also came back down to pull liquidity from this zone. So we actually still look forward for buys. But when you look closely, you realize that the bigger time frame doesn't actually match the smaller time frame. The bigger time frame is in a sell. This is a place that we wanted to drop through, but I'm also looking at it in a certain manner. I look forward for price pushing all the way up because after this last BOS, price did not really do anything before this actual push all the way up, right? So you can see that the 714 method works very nice. Look at this drop right here. We are looking for buys. Look at those buys right there. So with this drop, let's try our best and look forward for another buys, right? So I have to execute my trade, but because we've already picked, I'll be executing two trades. So because we've already tested the order block, I don't really have to worry about my stop loss because I have to put it just below it. A tested order block is an order block that can be broken through, right? So I don't really have to worry myself about this trade. I just have to know where the stop loss is. So it's very simple. You use three things to actually execute your trade: support and resistance, fair value gap, and an order block. Now, most of the times I do execute my trade before I calculate my TP levels. Why do I do this? Because you don't know your stop loss yet, so it's very hard for you to calculate your TP levels. So if we are targeting 1:2, it's just probably going to be one right here, so probably just around this level right there. So let's say this first TP is just about this high right there, and probably this is just going to be the second TP. So this is kind of 1:2, but because we are also looking at it on a bigger scale, we can probably try our best to catch the last high, which should be this double top right there. Now, if price did push through this high, we'll obviously look forward for price still continuing all the way up to this zones right here. So that's why most of the times I don't really put an automatic TP, because sometimes the trend that you are actually trying to catch will end up being a very huge trade. So imagine this is just what we want. This is the 1:2. We don't really have to stress ourselves. But in any case, price continues to shoot. So this place is just kind of messy. I have to actually remove this so that it should look a little bit clean, right? So in any case, price continues moving all the way up, then we should be targeting something that looks like this, something that looks like that. So you don't have to hold all the trades all the way up to that highs right there. You realize that I always take two trades. Why? Because if this trade is done and dusted, I can just choose to take out one, put the rest at what? Break even or in profit. In any case, price reverses all the way back down to take me out, I'm already in profit or I'm already at break even. So there's absolutely nothing to worry about. So yes, this is what we are looking forward for. So our TP1 could potentially be this high right here, or maybe we could also look at it at this high right there, which will probably give us about 2K. And if price still continues to push all the way up, we'll probably hold our TP2 all the way up to these zones right there. But under normal circumstance, if you are using the 714 method, I'm actually trading in accordance to the bigger time frame, and I'm looking forward for a reversal from the bigger time frame. That is why I'm executing this trade. If I wasn't looking for a reversal, I would have waited for the 714 method to break through this low before I'll continue the trend, which is using the reverse 714 method. The reverse 714 method is just finding a what? A BOS to follow the trend, the actual trend. So right now that the 714 method within this zone, we were in a downtrend. We are looking for buys. Now, if I wasn't looking forward for a major trend reversal, I would have not taken this buy right here. I would have waited for price to come back down, take out this low, and I can now sell back down because I'm following the trend. I'm not trading the 714 method at that moment, which is what I call the reverse 714 method. So yes, under normal circumstance, if you execute a trade on the 714 method, is the last high that you should be targeting. So our target should rather be this, not this right here, not this as well. So you should be targeting the last high, and after that you can target the rest. So yes, this is what we are currently looking at with the 714 method. Price is currently shooting up. We are obviously in profit, but there's still room for error. Why am I saying there's still room for error? So all this zone is for price to fluctuate in case we have one. So if there's no fluctuations, there's no problem. We just go straight to TP. But if there's fluctuations, then we'll actually have a big problem, right? So yes, as for first TP, I've already said it's supposed to be around this zone right here. So at $800, but because it's quite close to our stop loss, it doesn't make any sense for you to execute this type of trade. This is more or less one is to let's just say 1.5. It's not even up to 1.5, right? So more or less 1:1, which is weird. So we have 1:2 about this high right here, which we should look forward for probably a region that we think price might reject, which I was also targeting this high right here because this is possibly a region where price might actually want to do what? Reject from, or where price might actually want to shoot all the way up through. So because I actually want to wait or hold my trades for a very long time, I'll try and catch these two right there. Or I should just let this 714 method play out so that we'll understand it, and the second trade can just run to probably the last TP or maybe just around this zone. Yeah, that would be all right. That would be all right because I just want you guys to understand it's quite simple. All right. So this is what we are looking at today. Now, obviously, when you look closely at yesterday's 714 method, could you have also traded this? You realize that we were in a downtrend. If we're in a downtrend, what do? You look forward for buys. What do you use to buy fair value gap, support and resistance, or an order block? Now, obviously, price did get out of the trade around this zone, pull back to the last order block, and we shot all the way up. But this would have been very, very hard for you to actually trade. So the next thing you can do is just wait for this high to get taken, and you can obviously buy all the way up with your stop loss below this zone right there. So you could have also executed this trade yesterday with the 714 method, and this could have actually been a very good trade all the way up. Now, if you had actually missed the 714 method yesterday, you don't understand how to probably execute a trade with the 714 method yesterday. There's another strategy that I thought that you could have also used to execute a trade, which is the short burst strategy. So more or less yesterday, the short burst strategy and the 714 method would have actually went hand in hand. Why am I saying hand in hand? Because obviously there's a double bottom right here just below this zone. So let me take out the 714 method lines so that you can actually see it well. So yes, you can see that this is a double bottom. Now with the short bar strategy, after a double bottom is created, you want an immediate change of character. So above here was just around that level right there was the immediate. I think I actually picked this. All right. So I wasn't picking it right. All right, so this right here is the immediate change of character, and obviously you execute your trade with this short bar strategy. So this should have also been your trade with the short bar strategy, but with the short bar strategy, note the stop loss has to go just below the double bottom right there, and you target your highs. So you could have targeted this high right there. That is just where you should have actually targeted. Now, under normal circumstance, I wouldn't have targeted the high. I would have actually targeted this lows right here because that is a resistance zone for me. So within this lows is where I probably would have actually wanted price to reject from, and that should have been my trade all the way up if I actually wanted to use a short bar strategy. Right now, most of the times I don't really get time to use these strategies because if I don't see it, I can't trade it. Most of the times I'm always on gold, so it takes a very serious hard work for you to be on all the charts at the same time. So you try and ignore some just to get good quality setups, and you try and execute some just to get good quality trades. But yes, that is just it. You could have executed the trade as well. Now let's look at I just want to add something. I think let's look at the day before yesterday as well. So this was actually Monday, right? So Monday, let's see what happened. So price started around this zone right here. Now this is where the 714 method works, right? The reverse 714 method works. Look at something here. So obviously price gave us a low. We had a couple of rejections just around this zone right there, just a couple of rejections, right? Until price did what? A drop all the way down. The 714 method started. We can see a high, a low, and price did end around this zone right here. But overall, that was an uptrend because we have a leg up, right? So price did come back and take out that high. Now, obviously, I do have my level set already. I would have already been in a buy about this highs all the way up. Probably chasing price to this or maybe that right there. That is if I was using market structure, which is this levels that I've marked. I know my zones, that is the bigger time frames. So above this, I know I should be looking for buys all the way up. That is very, very cool, right? But if you're going to trade the 714 method, you use the reverse 714 method today. Why? Because despite we are in a downtrend within, despite we are in an uptrend within the 714 method around this zone right here, and you are looking forward to sell back down because you are looking forward to either use this other block right here. So when price gets to that zone, which is just around this zone, you should have been looking forward to sell back down because we are in an uptrend within this range. So you are looking for sales, right? But despite we are in that type of scenario, you realize that price consolidated around this zone. This right here was a change of character before price even got to this high. So all you needed to do was just take your time, probably mark this ranging highs right here. If price did not break through it and we have a break below, you could potentially execute a sell, because if price did not break above this, then it's obviously mean price want to drop back down, which will be a good thing, right? Which will be a good thing. You can get a trade all the way back down. But if price actually breaks above it, that is where the problem kicks in, because we have a change of character right here. So let's just put it right there, MSS. Why am I not picking this stuff? I don't know. I'm quite picking it wrong. So right here we have our MSS, right? Very nice. So after that we have a ranging what? Trends, or you can just use it as a resistance levels. So this couple of resistance zones should actually aid price to drop down if it wanted to. But because we have a market structure shift, buyers are now taking in the market. They are pushing all the way up. All you need to do is just a breakout. You can wait for a breakout, a pullback, and you execute your trade. Now, a lot of people mistake this. Look at this, for instance. So if we have a pullback or a breakout, sorry, if we have a breakout, we already know market has changed character right here. A breakout. This is a pullback down to that breakout. It did not test this. A lot of people will be waiting for price to come and test. It doesn't matter. This pullback shouldn't test this. It shouldn't test that if price doesn't want it to. So if price doesn't want it to test this, no, this right here, it's not going to do that. So all you need is not for the pullback to test a zone, but all you need to trade is for there to be a pullback in the first place. After that pullback, you need to start seeing what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. On the smaller time frame, you are building up, you are doing what? You are executing your trade before you realize we are at this high right there. So when I look at pullbacks, I don't look at it for it to come to a zone. No, I look at it for it to just drop freely until it stops. When does it stop? When it starts giving me bigger what? Buy moves, or when it starts giving me higher highs and higher lows, the trend has stopped. Or you can just use the old thing every single trader needs, right? Which is when the high gets taken, you just execute your trade, because at this point your stop loss is tight and you know where price is going. Now the couple of things that you have to take from this is, if you are executing at this high, your stop loss has to go below this. Why? Because if price is giving us higher highs and higher lows, then a higher high is never going to be taken, because price is pushing all the way up. So you could have also executed your trade and you would have been in what? Massive profit with your stop loss below this. Now, because this level right here was a resistance zone which just turned into a support, so I'll actually suggest your stop loss should have just gone below this right here. So very, very simple. It actually works, right? I've used this countless times. You've seen me use it live with my students. I've traded this live with my students. It works. It's a very good strategy. Just that if you understand market structure movement and you add it to it, it makes it marvelous. You get bigger yet very, very strong trades, and they all push to TPs, or they all push higher and higher. So let's see what happens to this trade right here. I can't possibly talk till the end of this trade, so definitely I'll have to just probably record.
One eternity later.
All right, so this is what we are currently having, guys. So for a minute, I actually thought I lost you guys, because I set alarms right here for price to actually trigger when we are pushing all the way up, so that you guys will see price hitting this high right here. I just got back onto the market because I thought price was just going to shoot up and you guys will not get to see it. But yeah, as you can see, price is still pushing all the way up to that level. Now, per the strategy, this was supposed to be the first high. As I've already said, this was supposed to be the first high right here, per the strategy. Now, it would have already been taken for a very long time, but because this was not a good risk to reward ratio, that is why I'm targeting this high right here. Now, you can see that I've actually marked this and this right here. Why? Because the sole reason why we executed the trade right here and our stop loss was below was because price created a what? Higher low right here. So higher high, higher low. Higher high, higher low. Now, if price wants to keep this upward movement, there's absolutely no reason why price will come back and take out this what? Higher low right here. So since we've created another higher low, around this zone, price shouldn't take it if it actually wants to continue pushing all the way up. So that's why you always need to mark your levels. In any case, price takes out this level right here, you can just get out of the trade and you are good to go. It's not really a big deal, right? So that is just it. Now, obviously, you can see that the strategy worked perfectly.